Let's talk about Citigroup. Let's talk about, you made a bold call when we were really in the mud a few sessions ago, that this was absolutely a buying opportunity for people that may be coming around to your point of view, Jim, and particularly if we hold higher today.
My friend Bill Ackman buys 150 million. Look, I got to tell you, here's the way I look at this thing. Supply begets demand. Suddenly we realized the government was able to sell all that stuff pretty easily. Government reloads. We know that they use like a 4 low. We got to go in there. I mean, all the big institutions are thinking this is a chance. Vikram Pandit's done an amazing job. The stock is well behind the group because the government is letting go a lot of stock. I got to tell you something. It is not too late. I would urge people to own this stock for the next 2 years, not the next 2 months, for the next 2 years. Because when that government gets to a certain level where they're down to like around 10%, big institutions are going to come in some. They're going to say, I want a billion shares. Give me a 500 million shares. You got to get in ahead of those institutions. That's why you should buy it now.
There's the Citi. We're talking about Citigroup. We should make clear here.
Yeah.
Yeah.
No, we're not talking about Popeyes.
No. What about Goldman's?
What do I think about Goldman right here?
Yes.
Too hard.
Really?
Yeah, charitable trust that I work on owns it, but I can't, look, I don't think there's any Justice Department, look, like I said the other day, if AIG isn't going to get indicted, these guys aren't going to get indicted. But you know what? I don't like battlegrounds. And this stock is a total battleground. Any day you can pick up the paper and there'll be some senator or someone. Look, the New York Times, I think they have a quota. I think every 3 days they got to write a negative story about Goldman. I don't know, maybe it's been increased to like every 2 days. I can't stand picking up the New York Times. I like to read the Times. But if I'm going to read about Goldman every day as being the worst firm in the world, I can't take it.
What happens if we get through FinReg? I see talk on here, people putting out estimates as to what Goldman might have to pay to settle with the SEC. We could quite easily get past that. We could quite easily get
I agree with that.
FinReg.
I do think that Goldman could be looking at the largest fine in history because the SEC doesn't want to let them off. And they're just too popular to beat up on. Why do I need that? Look, again, I think Goldman, as it goes toward book, I mean, Jesus, almost at book. It's an inexpensive stock, but it's the headache headline risk. I'm just saying portfolio managers cannot take the endless Gretchen Morgensen articles about Goldman Sachs.
So what dark little crevices of the market would you take us to then that are sheltered,
what is sheltered right here?
Energy, I bet.
I happen to like energy very much. When I see a Total, it's yielding more. Total hasn't spilled any oil that I know of. You got Statoil. I mean, hey, Statoil's 5% yield. It's doing really well. I really think I love yield. I love utilities right here. I think that this market today. Hey, listen, Simon. This is one of the things I want to talk to you right up top. Remember yesterday you were saying, have any of these things in the euro been cured? How about the bond spreads? Nothing's been cured, right? So we have a reactionary, oversold market that's rallying, but none of the issues that have bothered you all week, Simon, I watch you closely, have been solved today, have they?
No. But what's really important is within that we have a credit problem.
Right.
And if the credit problem isn't solved, Jim, surely that could come back quite nastily on this market.
David Faber and I used to talk constantly during 2007, 2008. When are people going to realize that the credit markets are bubbling underneath and it's made the whole equity market like quicksand? I continue to believe that extreme caution is needed. I know on a day like today, no one wants to hear extreme caution. They want to get euphoric. I'm the opposite. I look at today and I think, okay, those of you who wanted to panic out the other day when we dropped, now you should be selling because the credit problems haven't been solved. Banco Santander, Banco Bilbao, BBVA, and when these things, if these things were 12, 15, and they're moving up like 20, 30, 40%, those are my barometers of stress, I would feel better. But you know that the spreads haven't changed with these near-to-well countries.
I know analysts that actually I respect that are calling Santander up 70% over the next 18 months.
Well, I think that Santander is worth a lot. I think that the government may have to force a dividend cut there. The dividend's very big. Obviously the yield's very high. I also feel like that I hope that Tim Geithner says, look, you guys ought to try TARP over here. You got to be sure that Banco Bilbao and Banco Santander are not in trouble. They get through this period. They're too big. Banco Santander is way too big to fail. Way too big.
That's true. Very true. Jim, got to leave it there. Thank you very much.
Keep talking your sense, Simon.
Oh, bless you.
Not the Popeyes, though. It's
and
real
you
good.
too, sir, at 5. Jim's got Ray Milkovich's last interview as CEO of Foster Wheeler on Mad Money at 6 tonight, and of course repeated at 11 o'clock. One of CNBC's best, as you know. Up next, a check on the oil close, the highest in 2 weeks, and why the flash crash is back on the front burner.